In this video, guys, we are going to talk about once you make a trade, should you avoid the news? In other words, you've got a trade on, should you then avoid any opinion, any stuff on social media, any articles from that, or should you go out and seek it to try and make you more informed about the trade that you're in? Stay tuned. All right, guys, well, welcome to you. Okay, so you're in a trade and you've got two options here. Let's say you're in a stock trade, for example. You've got two options. Do you avoid anything, any opinion, any articles, any stuff on social media relating to that trade, or do you seek it to help you with the trade decision? Now, I want to separate this from kind of market impact news that comes out from the company or comes out from the economy and stuff, because that's going to fundamentally affect the trade and it's probably going to affect your decision. Fine. What we're talking about here is whether you're looking at perhaps your trading buddies, the people that you kind of share your trades with. Perhaps you follow people on Twitter or on stock Twitter, you're on bulletin boards, maybe you've got subscription to certain newsletters, all this kind of stuff. And we know there's loads of information flow about stuff out there. And you either can go, right, well, I want to be as well informed as I can. I want to hear different people's opinions and make my own judgment. And that's this one. It's good to get more views and opinions. That's the argument for doing that. And that's why people do it. They want to get confirmed. They want to confirm that they're right. Hey, look, I'm bullish and all these people are bullish as well. This is a bullish article. I'm right. Great. And they kind of want to have that confirmation from others that they're in a good trade. Now, I disagree with that. I think that is a bad thing to do. And again, in my opinion, guys, you might disagree with me, in which case, let me know why in the comment section below you go out and you seek different people's opinions or you seek articles to confirm your trade. Bias. I'd be interested to hear. But I think that doing that can open a can of worms, and let me explain why. So if you're in a trade, you kind of should be, you've made your plan. Your plan is, okay, I'm risking X, this is my exit, this is where I'm going to come out, this is what I'm going to reevaluate, it's my position size. And you really should stick to that unless something fundamentally changes, which is why we don't ignore market moving news, of course. We want to assess that and go, hey, something fundamentally has changed, changes the thesis, I might want to adjust the trade. But someone's opinion is irrelevant to the market. And really, once you've made your call, you should kind of stick to it, because price pretty much rules all, because we can have a sea of experts telling us this thing's overvalued, and there's loads of examples, guys, and we've had that, and the market's just gone chug, and they can be completely wrong, and it's just been pointless listening to them. And also, you kind of want people to be wrong, especially in the example in a stock trade. Stock trade is a great example. Stock's been beaten up, kind of sitting there basing at a bottom. You don't want everyone to think it's a great buy. You want people to dawn on them that it's a great buy after you're in. So you don't want to be the first to buy, because that's normally a bit early. You want to be with the earlier ones though, because then when people start to think, hey, this stock looks pretty good, they start writing articles, they starts getting more traction on some of the social media platforms and message boards, etc., then more buyers come in, then more price starts to lift up a little bit more, then more and more, and you want to be selling to the kind of peak buyer, if you like. So you don't actually want to have many articles confirming, and I know it's different for bigger stocks and currency pairs, I get that, but in that example, you just don't want it. You want to be one of the first to realize that, hey, this might be a great short or this might be a great long. Because generally the crowd trade, if it's a crowded trade, is often a bad trade to be in. It can be okay, it can be a lot of juice from it. A lot of movement, like we saw with the cryptos, very, very crowded, and they ran on and on and on. But of course, the reversal was brutal as and when the crowd got caught on the wrong side, because they're all trying to get out of something they can't get out of. And the other thing, guys, is that you can get shaken out. Now, what do I mean by this? So we've probably all been in this position where we've got a trade on, and maybe we're looking around on bits and pieces. There's an article or a tweet or whatever it is written by somebody who you're following or you're reading, and you kind of think they're a good trader or an expert in the field or whatever, and you have weight on what they say and they're bullish. And then similarly, you've got someone else who, again, you put weight on what they say who's bearish. And you've got these two perfectly valid bullish and bearish arguments. All that does is create confusion in your mind. And you're looking and saying, hey, or the economy, let's say you're short the indices. Oh, the economy's booming, it's looking great. Here are the numbers to support it. Like, well, that makes sense, that's logical. Ah, yes, but we've got this and this. There's a bit debt overhang. We've got this coming up and that coming up. And you look at both these things and go, well, they're both valid. What do I do? And the trouble is, you can get shaken out then, because you of course, we know how challenging it is, guys, to hold trades as well. Sometimes you're in a trade, it's working well. The little chimp on your shoulder is saying, take the profit, take the money, there's good money there. And the other side saying, no, listen, the trade's working, I need to run it, I need to extract the most amount of profit from it. You don't want anything, if possible, that's prodding the chimp on this side even more to say close it. Because then you just say, well, I saw that article, I read this piece, and it looked like really logical, I'm going to close the position. And you get shaken out of some of the best trades. And you end up doubting, in other words, you doubt your position. If you're in the position, especially if it's not quite your stop, maybe it's sitting against you for a bit, you end up doubting it. You're like, well, maybe I'm wrong. Maybe the trade's not right. Maybe look at these people who are saying stuff against the position, and I think they're reasonable people to listen to, and they've got a really good argument for it. Maybe I'm the one who's wrong here. And trading's not like that, guys. You know that. You know that it's about taking a trade, managing the risk on the trade, finding a good place to express the trade with the least amount of risk, preferably with a decent risk-reward ratio, etc. So opinion, it shouldn't really matter. And the other thing is, which is more damaging in my opinion, is it can trigger a lack of confidence in your system and setup. Because almost by the very nature of what you're doing, you're trying to reinforce your trade idea. You're like, hey, I'm long, I want to see, but you can't help but see negative articles or negative tweets or negative comments as well about it. And so you almost end up having a lack of confidence, because you end up saying, well, this guy seems like he's far more an authority to talk about this. Maybe let's say long Tesla or something, right? Electric car expert talking about how Tesla's not going to do this and do that, and he looks perfectly makes sense. And then you kind of struggle in your mind and go, well, am I going against an expert in inverted commas? Should I really be doing this? And you end up having a lack of confidence in your system, because ultimately, guys, traders are looking for a trade from point A to point B. We want the valuation of that asset to go higher if we're long, or to go lower if we're short, and that's how we make money. And so, these guys may well be right in the long term, but it shouldn't really affect us. So I think you've got to be very careful about this. And it can just lead you to complete paralysis. You can get shaken out of trades because you're constantly looking at articles to reinforce the trade that you're in. You're constantly looking at stuff news that supports your trade. You end up just being fried because you can't think clearly. You can do, by all means, it's my opinion as well, by all means you do all that research, you make a thesis. Once you've done that, you've taken your trade, then don't look at stuff again. Now, of course, if your thesis is based on something changing with the company, you're going to have to, or something changing with the economy, or something changing with the asset you're trading, you're going to have to keep an eye on just actual data. Let's say you're trading crude oil, look at the inventories, you're looking at OPEC news, whatever it may be. You're still going to have an eye on that, because that's the reason you took the trade. But what you don't want is to see everyone who's bearish on crude oil, everyone's bullish on crude oil, wading through everyone's opinion, because everyone's going to have an opinion on something like that. And all it takes is for one to strike a chord with you that maybe is against your trade, like, that makes perfect sense, to make you wobble a bit in the trade you're taking. And then you're never ever going to have a really good trade, because you're always going to wobble. You're always going to find at the point where you're thinking, I might want to take the position off, a reason to and justify it. And you're never going to be able to hold the trade to fruition. You're always constantly going to get the challenge of being shaken out of the trade just out of fear that, oh, maybe I'm right, maybe I'm wrong. So I think once you're in the trade, you've done your due diligence, you've done a research, you're in the trade, it becomes a pure price thing. If you get stopped out, you get stopped out. If you hit your target, hit your target. Maybe have re-evaluation points every week or whatever, if you're trading, swing trading for a longer period of time, that you re-evaluate. But seeking out people's opinions, in my opinion, is not the right thing to do. I know why people do it, I understand why people do it, but I think once you're in the trade, you're in the deal, it is what it is, it's going to work out or it's not. All right, guys, take care. See you next one. Bye-bye.